Hello everyone, you're welcome back. It's TECHRIZ here and I'll be your friend, your host and your tutor. And in today's video, we will be talking about mitigation, right? A not so difficult topic, but many persons make it seem like it is some sort of a big deal. So mitigation is just simply the reduction of risk, right? When you hear of what mitigation, it's what the reduction of risk, right? So by that I mean actually the literal term, reduction of risk. Now, mitigation when it comes to trading is basically the reduction of orders in another block. So let us say we have like zone A. Okay, let's say we have zone A, then we have zone B, right? And then price comes in. Let's say we have orders here, and the orders are 100%, right? 100%, right? Now, when price comes into zone A and mitigates this zone, we can say that price has mitigated zone A, right? Price has reacted from zone A, right? But zone A has levels in it. Now, 100%, we have 100%, we have 75. If you're into all of that stuff, so you can just basically take your gun box. 0 is on, 0.5 is on, 1 is on. Put on 0.25, right? Put on 0.25, so you'll be able to see 0.75. Yeah. So yeah, so you can be able to see 75. But my own just has 100%, 50 and 0. Now, this is a mitigation, but now there's a rule of an order block, and it says that if an order block is completely mitigated, that price has no business with an order block again. It's completely mitigated. Price has no business with an order block again. If incoming price action reacts up to 50% of that block, if incoming price action reacts up to 50% of that block. So if price reacts up to 50% of the block, we can say we have a complete mitigation, right? But you know there are sometimes that price reacts up to even 100% of the block before going up, right? It's still a mitigation. It's still a what? Mitigation. But the rule of order block says price is going to mitigate up to 50% of it. But now some other blocks just react on the maybe on the 100 or on the 75, right? And then they move up, right? So how do you then know if price is going to come back to the 50%? Now there's a very simple thing I always tell my students, right? You will, if price comes and mitigates 100% and leaves a rejection week, right? At least a rejection week. If price is coming back to that zone, and this is what you might actually know as engineered liquidity, right? So engineered liquidity too is not even also a difficult thing. I may be able to make a video on that to just show you some examples, but it's not a difficult thing again. It's just when price has no inducements, the first people, that's the first entry, those first persons that entered, price will want to just come back and use them as liquidity before going in what's the direction. That's just what engineered liquidity is. So, but that's not what I'm talking about here. So now let's say we have a cell rejection week is what's mitigated here, right? Or we have an expansion after a cell rejection week, right? Okay, yeah. Yes, yeah. Price will come back into this zone and mitigate it again. So, but just to be on a safe side, it is always recommended to not pick your order blocks from a mitigated standpoint, right? To not pick your order block from a mitigated standpoint, except that order block has a sell rejection candle that mitigates it, that is still looking like it is viable, right? But you're not going to face this commotion most times in the market. That's why I told you guys, trading is just very simple, but some persons just like to disturb themselves. It is not possible to trade every price move. If you don't understand what price is showing you at a certain time, it is best you just wait. In fact, waiting is even the best form of trading, right? There's a saying that says you sell. The three things you can do in the market: you sell, you buy, and you wait, right? Sometimes a good trade is no trade at all, right? Because you'll be trying to force yourself, you're trying to force trades, and at the end of the day, you'll be losing your money. So I don't really get why people actually false trades a lot. You're not understanding what price is doing you. You're seeing the setup and you want to go and ask somebody, is this looking good? Please don't trade. Don't be a goat. Don't trade it. If you cannot tell by yourself if price is going to buy or sell, don't trade it. Because you don't know what will happen. You don't know how you can actually arrange yourself if there should be any change in price action. You don't know how to arrange yourself. So there are sometimes that price will mitigate a block and still come back again to use that block. In those cases, like I said, most of the time, okay, there was a trade on GU. Principal have asked me so many questions on that other block, and I'm like, I just had to respond because I know it's newbies. That's their way. You can't catch every price move. You can't. I entered the trade already. I did not check. I did not move my entry. The trade was still running, right? Now the trade came back again to give more persons an opportunity. Mind you, the trade did not hit my stop loss, so that would have been a different case. The trade did not hit my stop loss. The trade came back again into that other block and bought again, giving others an opportunity to still benefit from it. As long as your stop loss is at the same place and is on an invalidating point, which is below the lows and above the highs, you don't have any problem second guessing another block or trying to pick another block again. Do you get? So that's the problem in most of you. If you cannot interpret the trade, do not trade it. Do not trade it. Sometimes price may just mitigate the block with the wick and come back to that block again to take entries before going up, right? So, but in those cases, it doesn't happen all the time. When it happens, you can just leave it alone and proceed about your daily activities. So in this part, I'm just going to do, if you just feel, can just do probably to this end, and then you guys can go and do your research. I'll show you where price reacted from just mitigated points and all that. So let's start from this particular place, price action. So you can see this block now. This block is mitigated, right? Because price came into this block. Price came into this block, right? You can see it is mitigated. Price was broke structure. And now you can only consider a mitigation when price has already broken structure with the body close. Because you're going to see some examples where price will not close with the body close, but price will just enter into the block. No, that's not a mitigation. A mitigation will only happen when price has sealed this zone with the body close. When this zone has been sealed with the body close, right? That is when you can consider any move into this place as a mitigation. So price will go up, come back, and mitigate it. Can you see? Now this is a mitigation. This is not a complete mitigation or a full mitigation. It's not a complete mitigation because price did not reach out to 50% of it. So, but that's a mitigation. And price may not likely want to come back into this zone to trade from it again. Now this is another zone. This is a block, another block. And you can see that price mitigated it. Can you see? Break, close, came back into it. You can see this candle here acting as a liquidity, came back into it, mitigated it, and we move, right? This is also on that block. This pair is what? Euro CHF. This is also on that block. Can you see? It has been mitigated. Candle close, price came into it, mitigate, and boom, up. Up we go. Right? Mitigation. So you guys can see it's not a difficult thing because everybody have been shouting mitigation like it's one so important thing. Now this is another one too. We have a break close. Look at the candle here. Price has not come into it yet, and so it is our breaker block. And you can see price mitigated it and dropped. Now look at this other block here. We have a close, we have this form of liquidity, and price actually came into this other block. I like to mark out my other block from the body close, but just because of you guys, mark out the full thing, please. Mark out the full thing so you don't miss trades. But you can see what happened in the future here. Price later still came back into it. This other block has been mitigated. It's now empty. Although it has not been fully mitigated or completely mitigated, right? It has not reached the 50% mark. But you can see what happened here. Price broke through the other block, even up to the complete zone, and dropped into this zone. My guesses are that price has already invalidated this block, right? Price has already invalidated this block, and what happens? Price has already come into its next move is towards go up, right? So that's what you say when a zone has been mitigated. Just gingerly avoid it if you don't really want problems at all. Gingerly avoid it. So this zone has not been mitigated. None of them have been mitigated, and I can see that's why price came into it a bit. bought up to this block and dropped. Has not been mitigated. This block has been mitigated. Right? This zone has not also been mitigated. This one has not been mitigated. And it's not all unmitigated zones that price will react to. It's not all unmitigated zones that price react to. Now this is also an unmitigated zone. Price reacted from it. Now this is what I was saying. Price reacted from it. Now this is what I was saying. You can see that there was no body close. There was no body close before price came into it. You can see there was no body close. It was just a weak close. Right? And price came into this block. This is not a mitigation. This is not a mitigation. This is not a what? A mitigation. Right? That is not a mitigation. Right? So this is a mitigation. And you can see that's why price didn't use this zone. This one is a mitigation. Because you can see after the body close, price came into it. Right? So that one is a mitigation. You can see that's why price didn't really want to come into it. Right? So the mitigation is just, you're going to trade mostly from an unmitigated point of interest, right? Trade mostly from unmitigated points of interest. This is a mitigation, right? This is a mitigation. This one too is a mitigation. The body close came here. Body close came to the second candle. So we have this other block and the mitigation finally came. So this is a mitigation. The body close as well came on this second candle. Right? So this is a mitigation as well. Price broke out, closed with the body, came into it. Broke out, closed with the body, came into it. This particular low acting as what? Inducements. Price broke out, closed with the body, price came into it. So this is a mitigation. And where you don't see mitigations or where you don't see blocks, don't trade from there. Right? This is a mitigation. This one is a complete mitigation. Price mitigated, even broke through itself. But that's a mitigation. Price will never use here again as a form of entry. If price comes back here, what's going to do is just going to take it out. Right? This is a mitigation as well. It's a mitigation as well. This is a mitigation. So the whole thing about the mitigation is just you need to trade from only places that are mitigated, you need to trade from places that are unmitigated. It is advisable to trade from unmitigated points of interest, POIs, than trading from mitigated points of interest. Why? Because mitigated points of interest, what happens, according to the normal human psychology, is that when people say that a zone price has tested a zone, or price has reacted to a zone, or price has mitigated a zone, what happens? Everybody removes their orders. Me, gang, if price mitigates it and probably I have already placed my entry at 50%, and price came and mitigated it, I'll be like, oh, this trade don't go. I just cancel. And that's what happens. When price now comes back again into it, there are no sufficient orders to hold price, and price just breaks through it or uses it as a form of liquidity. That's just the logic, right? So trade from only unmitigated points of interest. Do not trade from already mitigated points of interest. So with these few rules, you can actually go back and chart and look for mitigated points where price reacted to, and all of that, and see how price reacted from them. Right? I'll see you guys in the next one. Take care.